Hello, my name is David. You can call me Don Monroe from the coastal KE, Kenya. So today I'm here to teach you about what forex trade is. Many people have a lot of question about it, and I just want to be quick to explain to you what forex trade is. I'm not here to teach you how to trade, but to explain to you what forex trade is and where does the money come from. What do people do in forex? So here's a very quick information. We have Omondi and Kamau. Kamau lives in Kenya. Omondi lives in USA. So Omondi from USA and Kamau from Kenya. Omondi calls Kamau from Kenya to come to USA so he can enjoy himself as a friend. And Kamau travels from Kenya to USA. So Kamau travels from Kenya to USA with 1 million Kenyan shilling as money that will cut his expenses. But Omondi had paid for his transport to come to USA. So guys, as you can see, as Kamau travels from Kenya to USA with 1 million Kenyan shilling, he has to go and exchange the Kenyan shilling to US dollar. At that time, or at the period that Kamau was traveling from Kenya to USA, the dollar to Kenyan shilling, the exchange rate was 1 US dollar is equivalent to 110 Kenyan shilling. So Kamau had to change the money from Kenyan shilling to dollars so he can use it in America. You cannot use Kenyan shilling in America because it's not valuable, because it does not belong to his country. So as Kamau arrives in USA, Omondi tells Kamau that no, I've seen you have come with money, but no, you will not use your money. I'm here and I'll cater everything for you. So Kamau had to keep his money away without using even a single penny. So Kamau, after a week, travels back from USA to Kenya with his 9,090 USD dollars. So as Kamau arrives in Kenya, he has to exchange the 9,090 USD dollar to Kenyan shilling. So if there's something you have confounded, you can see that the US dollar was 1 USD is equivalent to 110, but the exchange rate had changed from 1 USD to 160 Kenyan shilling. So these rates can change due to many things. Let me give you one example. During the Ukraine and Russia war, there was a shortage of fuel. So in Kenya, we had a problem of fuel. The fuel price went up because Russia is the one that was supplying oil to African countries, East African mostly. So fuel prices went up, which it made the Kenyan economy shake. So the value of Kenyan shilling went up to 160. Well, the US dollar did not shake because US dollar has to its own oil, so they were able to supply oil by their own without depending on Russia. Other countries that depended on Russia, as one of the countries was Kenya now, had a problem. The economy shook a little bit, so the exchange rate now changed. You can see here, the Kenyan shilling now lost its value. It was 110 now to 160. It means now US dollar gained value, Kenyan shilling lost its value. But as you can see here at the beginning, that US dollar had more power already compared to Kenya, but now it gained more power, okay, it gained more power from 110 to 160, a difference of 50. So Kamau arrives at the airport maybe, and he went to change his money, and he found out that he has a profit of 544. So that's a profit of 454,000 Kenyan shilling. So Kamau was confused, like, how? I went with 1 million, why do I make this huge amount of money? So that's now we come to forex trading. So people do trade forex by using the exchange rates that are caused by a variety of things. So forex trading is simple buying one currency while selling another to make a profit from changes in the exchange rate. You always trade in pairs, one currency against another. You bet that one currency will get stronger or weaker compared to the other. So as you can see here, If Kamau was trading forex, he will not have to travel to America and coming back to Kenya to make profit. He will have just traded. Now there's the platform, now the forex exchange, whereby these rates we can see on our laptop and we can trade. Because changing this from the borders or where people change money, it's not easy, because if you want to change a huge bulky amount of money, it's heavy to carry, it's a risk, someone can steal it from you, and it's expensive because you have to travel from one country to another to exchange money. So that's where now forex trading come in. So forex trader do trade currency pairs by checking from charts. Let me show you this example of this chart we have. So this is a chart of Australian dollar versus US dollar, Australian dollar versus US dollar. Okay, so simple. So in forex trading, traders decide whether to buy or sell a currency pair by checking two main things: technical analysis, charts and patterns, that deals with charts and patterns, and fundamental analysis, which is economical news and data. So charts and technical indicators are used when you're analyzing using technical analysis. So there's something like price trend, there's support and resistance, and many things. So as you can see here, this is a bullish, this is a market that is moving up, creating a higher high, higher low, higher high. So trends, yes, you can see this is a bullish market. So maybe some people use trend line, they draw like this. So this chart now is controlled by this. As you can see here, these are the rates. We can call them rates. There's other name in forex whereby you can calculate, they are called pips, but these are rates now that change in very small. It only depends on the amount you're betting multiplied by the units when you calculate here. So this is forex trade. Actually, this is forex trade. So those who check economic news and fundamental, now they depends on interest rates. Higher rates usually strengthen the currency and they buy that currency. So there's a lot of news, there's employment data, inflation reports, central bank announcement, there's a lot geopolitical news, wars, election, trade deals that can make currency weaker or stronger. So that's what forex trade is, and that's how traders analyze the charts and the market to